Hello, everybody. This is the More Knowledge Show. Today is Wednesday, June 26th, 2019. And yeah, it's a lot of stuff going on. A lot of stuff. Last week we talked about this big global conflict that could potentially come and basically end the entire world. And, we saw some escalations in that. America put more sanctions on Iran, and Trump started talking about what would happen if we went to war with Iran. So I guess there's more talk that's moving into that direction of war, which is a bad sign. But also something else is going on is this Friday there is the G20 summit in Osaka, Japan, and President of the United States, Donald Trump, and Xi from China are expected to have a meeting, and this has a lot of implications for this global conflict that I'm talking about, because like I said, the global conflict is not just war, it's also like war with like the traditional war. It's also like economic warfare, and a trade war is a form of economic warfare. So we could potentially see a few things. We could see a complete resolution where we end all tariffs, and this of course will raise GDP expectations. This will the stock markets will go up. This will probably hurt the chances of an interest rate cut, which is something that the president wants, and the president probably needs. If he wants to get reelected, he's going to need a resolution on trade and an interest rate cut. I'm not too sure if that's going to happen, but that's probably what he needs, and that's probably what he's going for. But yeah, if the chances of an interest rate cut goes down, it'll be interesting to see how the stock market reacts, because it's a good chance that the stock market is not going to like that, and they're still going to try to push the Federal Reserve into the direction of cutting interest rates, because that is the type of market that currently exists. It needs constant stimulus. It needs easy money that can be easily lent out and supportive of the markets. But that's a potential scenario. Today the stock market's actually up because I don't know, some person in the government said that it's possible that there could be a trade deal. But the other scenario, which I think the stock market is currently pricing in, so it's expecting, is that they basically just come in and they say, we're gonna resume negotiations, and they may add in that some progress has been done, but I'm not too sure. And if that happens, I don't think the stock market is gonna go up a lot. It's just gonna continue on the current path it's on right now. It's still gonna expect an interest rate cut, and the anticipation for that should still push the stock markets upwards. And it'll say we're not gonna have those future tariffs are gonna be gone, which I think everyone's kind of expecting, and we'll kind of continue on the same track that we're on right now. And I think that's probably what's going to happen. But if that does happen, that really doesn't mean anything. The risks are still very high, because that's happened before, where they said that. It's happened where they said that we're a week away from a trade deal, and then the next thing you turn on the news, and then you hear that we're adding tariffs, and the stock market's down like 1,000 points or something like that. That's very possible. It's very possible. It really doesn't mean very much. It's just propaganda, I guess. It's just something to hopefully make people feel good, even though it really doesn't mean anything. And the reason why is that there are some fundamental things about the United States and China that makes it very hard for them to come together for this trade deal. There's some culturally there are differences between the two countries that makes it very hard for them to come together. So So the chances of them for just to come together after a long period of time of, you know, no negotiations, just to come together and say, okay, here's a trade deal, I don't think that's very likely. And then the other thing is, if there's an escalation, which I don't think will happen either. If there's an escalation, that means they add more tariffs and it completely breaks down. If that happens, then, the economy's probably going right into a recession. Stock markets are going to tank, but I don't think that's going to happen. Trump knows that he cannot allow that to happen. So the way I see it, I think that they're just going to come in, they're just going to be like, all right, we're not going to add any more tariffs. We're going to keep the tariffs that are currently there, and we're going to continue negotiations, and maybe they'll try to make it seem like there's more progress than there actually is. So that's kind of what I see going on when looking at the summit this Friday. But, I've been hearing a lot of people say, the greatest risk for the economy right now is trade is with China. And that's true. That's true. If this breaks down, we're going to, the recession's going to come a lot quicker. But, I think a lot of people are like, we've had these stress tests by the Federal Reserve, and they've kind of convinced people that the financial system is strong. That's what a lot of people believe. A lot of people think that, what separates us now from 2007 is that the financial system is supposedly strong. And I think they're missing a big factor. And that is, if you look at Germany, if you look at Europe, there's a bank called Deutsche Bank. All right, it's a bank in Germany. And, if you look at this bank, currently right now, they are, let's just explain what's going on before we explain the significance of this bank. But, they created a bad bank to put in a ton of their basically toxic assets. And, what they're doing is they're creating a separate, entity, and they're going to put they're going to put $50 billion of their, of their non-performing assets. A lot of them are like derivatives and a lot of stuff that carries a lot of risk. But the thing is, they've done stuff like this before. They're going to cut operations. They're going to cut off certain parts of their company. They're going to, in the past they've had something similar to this, but it was even bigger. So now they're having to create another separate institution to do something like this again. But if you look at the stock price of this company, which really shows how confident investors actually are that this bank will be able to turn itself around, because it's not been performing well. The revenues of this bank have been declining year by year. It's been declining in revenues, and they have a lot of toxic assets on their balance sheet. There's a lot of risk associated with this bank, so investors have lost a lot of confidence. In 2007, this bank was trading around $150 per share. Currently, it's at around $7 per share. Earlier this month, they hit an all-time low. And when they announced the bad bank, because it's supposed to be, they're supposed to try to reform it. The stock price, it went up a little bit, but then it sold off again. And what that really shows is that no one is really confident that this bank is able to break through and survive. Everyone's expecting this bank to, the investors are expecting this bank to fail. And with these financial institutions, if people have no confidence in them, even if they are solvent, which this bank is not solvent, but if they are solvent, if they lose confidence and they believe that the bank is unsolvent, even if it's true or not, it will become true. Because it's all about keeping people confident, keeping people invested, and it's how they remain alive. But clearly, investors have completely lost all confidence. The stock keeps on dropping. and it's been getting worse. Their performance has been getting worse, and they've been trying new things. They tried to do a merger with another bank. It failed. They've tried things for years, and it's been failing. So, but it's a it's a pretty important. It's a bank, and it's failing. But the main reason why I'm telling you this is that this is not just any bank that's failing. Okay, in 2016, the IMF called this bank the most important bank to financial stability in the entire world. All right, they have their amount of derivatives, okay, which are highly risky assets. A lot of them are traded over the counter. There's very little information on what they actually contain, but basically a derivative is an asset that derives its value from another asset. And a lot of times with these derivatives, you have no idea what they're actually deriving its value from. So it could easily lead to a collapse if all of a sudden people don't think that there's actually any value that's backing it up. So they contain a lot of risk, but they could have a $40 trillion derivative book, and that's 16 times the total output of Germany. So you look at the size of that, and then the thing about these derivatives is that in the bank they have many counterparties, and a lot of these counterparties are American banks, and then those American banks have counterparties with other smaller banks in America. So they have direct connections with like 8 banks, I'm pretty sure of, and a lot of other banks all across the world. This is the IMF itself said that this is the most important financial institution to stability, and it is close to failing. It's been close to It's been getting worse progressively. It hasn't gotten better. It's tried things again and again. It hasn't gotten close to being better. Over the past 5 years, the stock is down 80%. The market cap is like $14 billion. So, I mean, that's very small for a bank. And it's been getting worse. And when you look at the significance of it failing, it's not being priced into the markets at all. The markets are not pricing this in. But if this thing does come down, this could lead to, another thing that's completely being overlooked. Right now, I think there is attention being paid to the stuff going on with, globally with these trade wars, with the thing with Iran. I do think that they're underestimating the potential end result of it. But there's basically no attention being paid to the fact that the bank that is most important to stability globally is potentially coming down, and it could happen really soon. So I just think that's something that we need to consider, because it's not being priced to the markets. The investors in this bank are aware of it, but the entire market is not being aware of it. And they're not going to talk about this in the media, because if they do, they basically say that the entire system might come down. If there might be a big collapse soon, that's going to create a panic, and they do not want that to happen. But the thing is, it's going to happen regardless. Okay, and it's not very good, because when you have a $40 trillion amount of derivatives, that's 16 times the total output of a country the size of Germany. How are they going to save that? How are they going to be able to stabilize that? I don't even know, because we don't even know what's going to happen when these derivatives come down, because there's so little information about these derivatives. But the potential is basically limitless. I mean, there isn't a guarantee that this will lead to a collapse of all the banks, but it is a possibility, and it's not being considered at all. So I just think that's something else that we need to consider when we do things. We don't just need to be considering World War III. We need to be considering 2008, but like 10 times, 1,000 times worse. And people think that the system is stable. That's the general consensus among the market, but they are completely overlooking this problem that's going on, And it's happening right now. It's been happening. It's happening in the news. They're talking about the news, but they're not talking about the implications of it. It's like people forgot that this bank was in 2016 was titled the most important bank to global financial stability. So that's just something that I wanted to bring up, just to raise some awareness on that, because I think that's very important that people know about. And to close off the show, I want to talk about something else, because a lot of these banks in Europe are struggling because right now they're paying 21 million euros to the European Central Bank every day. And this is because the ECB currently has a negative interest rate policy. So a negative interest rate policy basically means you put your money in, you're guaranteed to get less out. So you're paying them money to borrow money from you. So it's completely messed up way of monetary policy, but I think that really shows that we are near the end, because negative interest rates are supposed to be like the last thing you would ever do to try to stimulate the economy, and it hasn't worked. The ECB has been doing negative interest rates since 2014. It's only grown. There's like $12 trillion of negative yielding bonds, and it hasn't really done much of anything. It's hurt bank earnings, and the next step from this is who knows what. They're gonna have to continue creating new things to try to keep this game going. And one analogy that's talked about a lot is calling this system like a drug addict, and that's being used a lot. And they say a drug addict, they take one drug and then they have to increase the amount of drugs they take in order to keep happy, even though they're actually damaging their health, to create an illusion of happiness. But it's not just that. Soon they're going to eventually, not only once they've increased the amount they take of that certain drug to a certain point where they can't really increase it anymore, they've taken so much of that drug, they're going to start finding new drugs, and they're going to start creating new drugs without even considering the effects of them. And that's what's going to happen here. We've outdone this interest rate thing. The ECB has lowered it below zero, and this is hurting banks. It hasn't really done much of anything. It doesn't work. So I think what that shows is, we're near the end. We don't really have much more space to room. We don't have much more room to move. There isn't much to go from here. And, the United States are still have positive interest rates. I guess we're kind of lagging the Europe. But all these, they're all connected with each other. And in the next recession, the United States is going to have to move into negative interest rates too, and it's not going to work either. And then they're going to have to start, they're going to have to start doing crazy things that we can't even really imagine right now. So I just want to bring that up because I think the fact that negative interest rates have gotten so big to where they are right now in Europe, that really just kind of proves that we are coming to an end of this cycle, of this system that's lasted for a pretty long time, and there's going to be a global reset, and the effects of this reset, they all tie into each other. This and the global conflict that I'm talking about, all of these things tie together, and it's going to get worse each and every single day. But I don't just want to come out here and try to say what's definitely going to happen and when it's going to happen, because I think a lot of people do that. They try to say by the end of this year recession is going to happen. I don't know that. We could still go on for a little while more. Do not underestimate how long these people can make things seem good. They can carry these things out. Deutsche Bank has looked pretty bad for a while. They've been trying to do all these survival things, and they've been pushing the inevitable complete end of their system for a long time. But it's eventually going to happen. And I can just, that's pretty easy to say. You don't have to be a genius to say something eventually is going to happen. But I think that the problem is a lot of people don't realize that it's eventually going to happen. They've been fooled by these people's ability to hide things and push back problems that they think that these problems do not exist. And that's not true. So anyway, that's today's episode of the More Knowledge Show. We will continue to get better. We're still trying to figure out how we're going to do this and how we're going to improve this show, but it's going to get better. This is only the 4th episode. But yeah, anyway, have a great week. Keep your eyes open, your ears open, and be ready at any times, because you never know when it could happen. And yeah, stay safe, people.